Good morning, guys. Happy Monday. Welcome back to our morning call here on Guardia. We do this Monday, Wednesday, Friday, and we also shoot some content in between, focusing on some more topical stuff. And if you are looking forward to that this week, we're actually going to do a pretty comprehensive breakdown of the whole OppenBarbie and the economics behind it, and kind of maybe what the intent was with each movie, and breaking down films a little bit in terms of their return profile, their worth, how investors think about film. And actually, I'm working up to creating a little interview with you guys with some producers. That way we can kind of Q&A them on some of these principles that we'll explore together on film and whatnot. But to get started, I wanted to do a brief kind of summary of where we are and the economics and the markets here in the States. And I shared actually this morning a great article by Barron's. If you're not familiar with Barron's, they are kind of the, how do I say it, the financial news connoisseur, the sort of highbrow, at least it used to be more this way. It used to be like more of a highbrow publication, kind of been a little bit eclipsed by The Economist as of late in terms of how people revere, their editorial and their writing and their ideas. But in general, yeah, it's kind of like the old guard go-to for a little bit more sophisticated financial news. But they do fantastic summaries. And I think they did the best job of echoing some of the things I said last week regarding tech companies, regarding earnings, and it does a great job of breaking that down. And so the way that we're looking at the situation right now is we spent basically an entire year very worried about a recession. We spent more than an entire year very worried about inflation, and looking at one of the other items in the agenda, which is food, it's certainly still here. It's certainly still something to worry about, and the prices aren't necessarily cooling down when it comes to food. And then we'll open a conversation about, well, are we food secure? Are food prices reasonable? Are the trends in food reasonable? And what we're going to look at. It also wraps into this conversation about ESG. For those of you that haven't heard about ESG, it means environmental and social governance, and it's been a little bit of a stamp on investable assets. I equate it to the organic label that we see on food. If you see ESG on an investment, part of the pitch is that this investment is environmentally conscious or socially conscious, and thus can capture some tax benefits, market with this moralistic approach. And in food, it's certainly been a popular strategy and continues to be, and continues to garner a lot of interest. But going into markets, where we're at, the Federal Reserve is going to talk about interest rate raises this Wednesday. So we'll meet on Wednesday again. I'll chat a little bit about this, but in general, the market's waiting to see, hey, the last inflation report was low. It was lower than expected. Shouldn't we be talking about cutting rates, pausing rates, and going back to, a coast is clear sort of mentality? Kind of analyzing Jerome Powell, particularly for the last 5 years, getting to know both kind of what his biases are and how he tends to unroll strategies. I don't think that we're going to see too much of an acceleration when it comes to the Federal Reserve cutting interest rates because the economy is so strong. So I think they're more interested in extinguishing inflation or out of control inflation before they start thinking about the economy, because the economy is okay. The consumer has remained really strong. Americans are still purchasing things, still maintaining sort of lifestyle, still spending more. And then we've seen corporate earnings throughout 2023 remain pretty strong, which confirms that information. If Target is reporting well, if Walmart is reporting well, if hotels and entertainment businesses are reporting well, it tells us the consumer's out there. The consumer's out there spending, things are good. And so I don't think that they're necessarily gonna use too much language that embellishes how quickly they're gonna cut rates and how quickly they're gonna make a better environment for businesses and consumers, prioritizing inflation by staying the course, keeping up with the plan. Because to be fair, inflation is one of those silver bullets in macroeconomics that just completely raises economies. And in the U.S., it's the scale of this country is so vast, and when large swaths of the population react, the results are fairly aggressive. So I think the Fed is going to stay the course. That said, we have 150 companies in the S&P reporting in the coming weeks. Last week, we actually saw the NASDAQ drop. There are some changes coming to the index. We can get into that. It's a little bit boring. We won't touch on that today. But these earnings are crucial because all of the pieces to the puzzle, like I said, consumer strength and corporate strength, have remained fairly strong. If we get a bad quarter in the S&P, if we see that some of the largest, most well-known companies in the US actually say, hey guys, we didn't do that well, March, April, May, March, April, May, that sends a signal that, hey, maybe the consumer isn't as strong as we think, or maybe the consumer is changing course here. Switching gears back over to food, we can see that food prices haven't really cooled down. I'll be sharing some media throughout the day to sort of exhibit that. I wish I had the charts today. I'll have them later on. But food prices have not really cooled, especially if you're in the urban setting. So, we look at that kind of national inflation number that came out last week, and it doesn't really apply to the entire country. It's especially in the economic centers of the country where a lot of people are employed and consumers are particularly active. So looking at food, looking at earnings, looking at inflation, looking at what the Fed does, we'll have a pretty clear picture of what the rest of the year looks like by the end of the week, I think, and certainly by kind of late August when we get the inflation data for July. So moving on, past food, past economy, we'll get into the fun stuff, right? Which is Barbie versus Oppenheimer. Barbie versus Oppenheimer, Barbie in particular, was like $120+ million budget film. It's already grossed over $300 million. So as far as film investment, I think the film has been a massive success. You see a brand like Barbie, Mattel. These are companies that make their wealth through owning IP, owning brands that are very popular, owning characters, like I mentioned, intellectual property. And you know me from my rants about Nintendo and how much I love that company because of its IP. I'm a strong believer in this. I think it has enormous value that's very difficult to assign a worth to, assign a value to, especially in terms of business transactions. Brands are the most powerful thing. I mean, they command an unbelievable amount of potential compared to other assets. If you own a tractor, the tractor can operate X amount of times a day. It can lift X amount per day with a good operator. It has a value. It's very more or less easy to price and assign. A brand is like, this brand could be popular for 100 years. It's very difficult to prescribe value to it. And more than that, we see the power of film and kind of commercial use to drive sales. This is something that I'll get into in kind of the film special for the week, but I'll give you a little preview. George Lucas, the creator of Star Wars, back in the late 70s, basically invented this process of like, let's make a film, let's build a universe, and let's monetize that universe using, toys, books, accessories, clothing, the whole universe. Let's bring it to the real world and generate another revenue stream. So Barbie, in that respect, has a lot more potential than Oppenheimer. But that said, they're two films with two completely different goals. One is kind of a historical dramatization. The other one is, a universe of a brand and of a culture. So really exciting to see that. A lot of sort of stimulus coming from the fanfare of Barbie in particular, right? And it has its claws in consumer products, in toys, in film, movie content, and of course, the moviegoer. It's been one of those films this year, and I think it's helped that it's come out with Barbie, Oppenheimer, Indiana Jones, a slew of summer films, and I do think that some economists are saying it is having, somewhat of an effect on the economy, getting consumers out, going to the movies, buying kids' toys, getting up and going. So that's what I have for today. Stay tuned for this week. Again, remember, we've got that Fed decision on Wednesday, which will give us a lot of clarity going forward. Hopefully, sometimes they give us a little bit of, epic poem language that we have to parse through, and that's when you read the minutes of the Fed and you kind of do your analysis. But for the rest of the week, that's what we got going on. We're going to talk a little bit about money, movies later on, Wednesday or Friday, depending on kind of what we hear on Wednesday. But that's it for the week. Stay tuned. Monday, Wednesday, Friday, we're live at 9 a.m. Take care, guys.